I'm talking today about copper. I've just been to the BMO conference and we saw some of the surveys from over 1,500 global fund managers and corporate executives in this space discussing critical commodities, and between 60 to 70% of the BMO survey was focused on copper being in an investment basket in the next 5 years. And the reason for that is we are dealing with the second deepest metal market in the world, requiring anywhere between 30 to 50% increase in supply over the coming 10 years, which is undoubtedly starting to become realised by the world that will be an insurmountable task, not least of all because of the issues that we have on declining grade, but most of all to do with the fact that we are not discovering these large deposits that are going to power the world forward towards electrification. It's nice to have all of these critical minerals to produce batteries, but the common element in all of this is electricity. And copper is the pipeline that produces the actual supply of that electricity for the world. So without copper, I would argue that none of this is achievable. So what Hot Chili has been doing has been developing a very large coastal copper play in Chile. We have, over the past 12, 13 years, built a consolidation to construct a very large copper production hub, the only large-scale senior development in the Americas at low altitude. We have over 3.4 million tonnes of contained copper in resource, over 3 million ounces of gold as a credit, one of the second largest molybdenum resources on the ASX, and quite a lot of silver. So a lot of optionality and a huge amount of leverage to what is undoubtedly coming. And what is coming? You're about to see the third commodity class over the past 20 years that is about to be exposed to extreme incentive price leverage. The first was iron ore in the early 2000s, $18 to $20 product, where the price of iron ore 10 times to around $200 a tonne, and created some of the largest mining companies in the world over that period in the early resource boom of the last cycle. Fast forward to the next cycle, and lithium has really been driving investment dollars and creating excellent returns, again with a 10 times on the commodity price. And really the key ingredients to producing such a price surge for a primary commodity like that is inelastic response to a demand shift. The commodity's inertia to produce supply quickly. And some of the themes that Joe has been talking about, development timelines, I often wonder whether the crowd really gets when they hear 15 to 20 years, 21 years to develop a project. These are black and white numbers on paper. Our eyes almost glaze over. You read it, you know that it comes from the statistics, you know that this is deeply embedded in the mining industry, but you don't really understand it until you've lived building a project. I founded this company back in 2008. We listed in 2010. We found a great discovery on the coastline. We survived a downturn that wiped out most of the copper developers on the ASX and left 3 standing in this cycle. The company reinvented itself, secured a private discovery that has turned into one of 2 major copper discoveries made globally in the last 10 years as measured by S&P. It's quadrupled our resource base. We sit with a 1 billion tonne senior play, the only one below 1,000 metres. We are now sitting in and amongst North American peers that typically have all of their deposits around 4,500 metres, again adding to this inertia for the industry to produce supply in a meaningful way. And when you can count the developers of scale in the world on 2 hands, less than 10 of them outside of the majors, we've got an issue. So with all of that in mind, just looking at the growth platform that Hot Chili is at the moment, backed by Glencore, 9.9% shareholder, very flattered to have the attention of one of the largest mining companies in the world supporting Hot Chili to develop this asset. The company has really transformed itself, not just by resource base, not just by over 10 years of permitting to address some of these time constraints forward, but also a rapidly changing board. We dual listed the company into the TSX-V a year ago, and owing to the pandemic, we weren't able to actually open the exchange, and Hot Chili opened the TSX yesterday. So very proud moment for the company as we start to North Americanize this company as our project is in LATAM. And at the moment, we sit at a significant discount to the handful of North American senior copper developers by valuation, something that occurred in the last mining cycle. And very few large copper developers emerge out of the Australian market. We're following after a very good pedigree. The last time this happened was a CEO by the name of Craig Williams, who ran a company called Equinox that was being valued by the Australian market at around $45 million. After 3.5 years of transitioning to the North American market and over an $8 billion takeover by Barrick, Australia lost its last true senior copper developer. And Hot Chili has moved into that space, and we're going through a very similar pathway forward as we grow this company. This is a bit of a summary of the last 13 years of my life and some of the dedicated executives that have held Hot Chili together through a lot of grit. We started on a part of the coastline that was missing a Tier 1 camp. We found a 250 million tonne open pit play, and we have put this together by bringing together deals with Chilean majors, Chilean government entities, private entities, smart deal making, consolidation, adding a significant amount of resource development and drilling dollars into the ground, and a significant amount of infrastructure consolidation and permitting. And that is why we stand with one of the only 2 projects globally outside of the majors that actually can bring plus 100,000 tonnes of copper supply to the market in 2008. We are a front runner project because of the timeline and de-risking you're looking at. So where are we located? And this is really a key differentiator. We are not a 4,500, 4,700 metre altitude project. We're on the coastline. The Pan American Highway runs through the middle of our projects. 600 kilometres to the north of Santiago, sitting right next to a third-party port that was built and hasn't been used for 10 years. We have de-risked this project systematically. Water is an existential threat to any mining project, not least of all in Chile. Over 10 years ago, we made a decision not to touch one drop of water out of the ground in Chile. And that decision now looks like a key masterstroke by the company. It was actually done because our ore bodies achieved 2% better recoveries using raw seawater. So after 10 years of permitting application, we are one of the only companies outside of the major mining companies in Chile to hold our own maritime concession on the coastline to extract seawater from the ocean. Just before Christmas, the Chilean Navy actually gave us the physical land on the coastline for access to establish our water operations. And these are hard assets that the company now owns. Also, at the end of last year, the government gave us the last connection or terminal connection to the central grid, to a base station about 17 kilometres away from our key projects. So surface rights secured, easement corridors secured, a very, very large advance on our environmental impact assessments, and now an opportunity after a recent consolidation move by the company through a deal with Antofagasta Minerals to upscale the project again and to target a position where we can get this project towards 150,000 tonnes per annum of copper production annually. And if we are able to achieve that through our next growth phase, then what we're looking to do is establish ourselves as the largest copper development project in the pipeline outside of the majors, with the nearest term development timeframes. This is a real history of our resource growth. Again, when you've lived every drill hole, this summarises it very succinctly. Our starting project, Productora, which grew rapidly in 2019, executing a deal when we were sub $10 million coming out of the downturn in market cap, $800,000 in the bank, and pulled off a transaction with a Chilean family, a billionaire family, that more so collects assets rather than sells them. We signed a deal to buy that asset for $30 million US when I had $800,000 in the bank. 3 holes into the drilling program, near 1,000 metre intercept at 0.6 copper, 0.2 gold from surface, carrying around 200 metres intersection at around 1% copper, half a gram gold. So during the pandemic, while most of us were focused on our families and loved ones, Hot Chili was producing 7 of the top 30 drilling intercepts in the copper sector out of Cortadera. It transformed our resource book and the company. And we now sit with an extremely large resource base, some $50 billion US of in-ground metal value. And this is what is underpinning us. 2 large conventional copper deposits sitting 14 kilometres away. They'll be developed via central processing right next to the Productora resource that sits at 800 metres altitude, and the Cortadera porphyry deposit, which is about to be upscaled again, will be connected by low-cost rope conveyor from 1,000 metres altitude straight across the valley. And what that gives us is it gives us scale, and it gives us the ability to tap into economy of scale on our costs. But this is the next move the company has been waiting 2.5 years to announce. And this is associated with our pivot towards growth this year and returning to a focus on alpha. You can see the 3 deposits that make up Cortadera's porphyry footprint, Cuerpo 1, 2, 3, large porphyries that come through to surface in a big footprint. What we had never showed the market for the past 2.5, 3 years was a tenement boundary map. And that's because everything to the west of Cuerpo 1 was not owned by the company. And we knew that there was another porphyry that had been discovered by Antofagasta, and we waited to be able to get our hands on that land and all of the land surrounding the rest of the deposit footprint. We now have a very large porphyry cluster to play with outside of the 3 porphyries that make up a 600 million tonne resource. And about 1 week ago, we just announced the first drill results coming out of a 10,000 metre program, hitting 5 of those porphyry cluster targets and confirming the emergence of a 4th porphyry. You can see also that we're not done with Cortadera. When you don't own the western tenement boundary, you don't like to generally drill up against the tenement boundary when your neighbour is Antofagasta Minerals. We're doing that now. Cuerpo 1, the smallest of the 3 porphyries, which originally didn't have a lot of drilling underneath it, is now getting drilling, and we're starting to see that extend at depth significantly, and looking forward to those results coming shortly. We've got a very healthy pipeline on exploration targets. We have some of the foremost experts in the porphyry sector working on this. Dr. Steve Garwin, a rock star in the porphyry geology world, leading SolGold's Cascabel discovery and drill out and growth, also leading Hot Chili's Cortadera exploration and resource build. What we're going to be doing this year and going into the early stages of next year as we look to position this upscaled pre-feasibility, which we've completed 80% of it already, is we're looking to take advantage of this land holding that Glencore recognised that could produce one of the largest scale development projects not handled by a major. So that is what we're embarking upon now in this final growth phase, to determine final scale before we submit our environmental impact assessment with that pre-feasibility in the first half of next year. And this is a real opportunity to effectively emulate, again, what Equinox was able to do from the Australian market and then transitioning into a true North American senior developer. And the reason why we're doing this and following that pathway set by Craig Williams in the last cycle is because we found ourselves as a very large fish in a very small pond in Australia. We got catapulted into the top 20 projects, and we're looking now to move the project towards a 5 million tonne payload or a Tier 1 definition. I don't like to take my definitions from industry CEOs. I like to go straight back to the USGS definition on Tier 1 deposits. Things have changed significantly since the rules were set some time ago. And this is our immediate concern. The mismatch in valuation between senior copper development players in the ASX and the TSX. It's something that drove Equinox towards North America, and it is something that has driven Hot Chili towards the North American markets. Market mismatches are not uncommon. If we look at the lithium sector at the moment, the Australians are paying about 2.5 times what the Canadians would pay for a lithium deposit. It's a little more extreme in the large-scale copper space for copper developers. That ranges anywhere between about 6 to 10 times out of the money versus the only 3 Australian peers that play in this space. So thank you very much for giving the opportunity to talk about the critical commodity, copper.